is good news for couples who have not yet set up trusts for their children. New IRS rules now permit married couples to leave nearly $11 million to their heirs untaxed. But you have to act quickly. Here with the details is WSJ tax reporter Laura Saunders. Laura, thanks so much for being with us.
Thank you for having me.
So these new rules make it a lot easier for couples to leave a sizable amount of assets to their children, correct?
Yes, that's exactly right. It's really a good thing because for several decades, people were at risk of losing one of their two estate tax exemptions if they didn't set up expensive trusts before they died. But not everybody is either willing to do that or able to do that. Sometimes things happen.
Sure.
And so this kind of strikes a blow for equity in that direction. You can do post-death planning.
But you have to act quickly when the first spouse dies, correct?
Yes, you really do. And also, two things have to happen. You have to file an estate tax return, even if there's even if there are not a lot of assets.
Right.
And you must do it within 9 months. And so it's a use it or lose it provision.
Well, now what's the main thing that's changed? The exemption? There are now two rather than one?
Well, no, there have always been two exemptions, but if you left all of your assets to your spouse, which many people do, then you would lose the benefit of one of those exemptions. You know, you could only leave half as much money. And so now, if you make a special election after death, you can preserve the value of the second exemption. They're each over $5 million, and that means that only like 4,000 families in the whole United States have to pay estate tax this year. So really, this is takes care of a lot of people.
Helping a lot of people.
Yeah.
Well, let's break it down in a way that's sort of easy to understand. Let's say a wife has $1 million in assets and her husband has $7 million. Mm-hmm. The wife dies, that $1 million goes to her husband. Now, that $8 million is too much to be untaxed.
Yes, you might have about $1 million of estate tax to pay on that when he dies. It's a simplified example. But under the new rules, you can file an estate tax, check a box, and all of her $5 million $5.43 million exemption comes to him. He has $11 million. He pays no tax.
No taxes. Fascinating. Well, Laura, thank you so much for that. That's a lot of good news for a lot of couples.
Thank you.